Good evening, everybody. It's a pleasure to be here. Sorry I look so much like a banker. I'll try to dress more appropriately next time. I'm the chief executive of something called Big Society Capital. Some of you may have heard of it. It's commonly known as the Big Society Bank. And what it is, I'll spend a minute or two, if I may, of my 7 minutes just giving you a very brief introduction as to what it is. We are a social investment bank being organized and set up by the UK government. And we start with to understand what Big Society Capital is going to do, you have to start by understanding or believing that there is an appetite among the investor community. And when I say the investor community, I mean everybody all the way from the smaller savers to the largest institutions, that there's an appetite for what we call social investment. And social investment means taking some small part of your investment assets and investing them with the intent of creating some sort of social impact, as well as generating some financial reward. So on the one hand, you believe there's an investment appetite. On the other hand, you believe that there is an enormous number of social enterprises in the UK today, and indeed around the world, that have to a large extent been cut off from funding and divorced from the capital markets. And Big Society Capital's agenda is really to change that. We will have £600 million of capital. £400 million of that comes from what are called dormant or unclaimed bank accounts. So any money that's been lying around in UK banks and building societies for 15 years or more is being swept up into something called the Reclaims Fund, and that money has been transferred and used to capitalize Big Society Capital. And in addition to that, we have a further £200 million of capital that we will receive from the large 4 UK banks under what was called the Merlin Agreement with the UK government. So in all, over the next 3 to 4 years, we'll be investing about £600 million. We're being set up under four basic principles. First is we're independent of government. So there's no government involvement, there's no board, there's no government involvement in the investment process, there's no government membership on our board. We'll be transparent in the way we report both our financial results, but also the impact we think we're having and the investments we're making are having. We'll be self-sufficient, meaning we have a mandate to at least maintain our capital base. So we won't be making grants, we won't be giving money away, we'll be making investments with a view to getting that money back, and as I say, earning some form of financial return. And we'll be a wholesaler, so we won't be interfacing directly with frontline organizations. We'll be building what we call an intermediary layer. So if you put it in the context of the commercial markets, where you've got £50 trillion of commercial capital around the world, and tens of thousands of intermediaries, banks, brokers, stock exchanges, venture capitalist groups, and so on, basically intermediating between the demand and supply of funds. In the social investment market, there is no intermediary layer. So our mandate is not to be that intermediary, but rather to sit above the intermediaries. So not to be the bridge that links supply and demand, but to help to build that bridge. And our mandate is to grow social investment. So we'll be judged by, if I'm back here in 5 years, and I ask whether or not people are familiar with social investment, whether they occasionally or often make investments with a view to creating this sort of social purpose, that you'll be able to put up your hands and say yes. And when we're with a group of social enterprises, that when we ask them whether or not their route to funding has been made easier, and there's more options, more investors, more product available, they'll say yes. So that's overall, a very high level, our mandate, and I'm happy to answer any questions later on that you might have on that. What's the rationalization for, or the rationale for Big Society Capital? And I think it's very similar to the rationale that you have used to talk about environmental issues. And that is that as our market economy grew and as capitalism grew and took root around the world, there are certain consequences of capitalism, and a market economy ignores. There are certain things that it creates that it doesn't put a price on. And sometimes these things are self-correcting and sometimes they're not. One of the things one of the issues we have with capitalism, and I'm sure something that you've talked about many times in this room, is the environmental consequences of capitalism. We don't put a price on damaging the environment, so therefore it has become a more and more significant problem for all of us. And I'm not going to talk about that issue tonight. The issue I'm going to talk about, the other consequence I want to talk about, is the social consequences. And there's no question that if you look at capitalist economies over the last 30 years, what we see is ever increasing amounts of social inequality. And just to share a couple of numbers with you, between 1947 and 1979, if you compare the top quintile earners with the bottom quintile earners, in developed economies, you'll see the top quintile earners' incomes grew about 99%. The bottom quintile earners grew about 102%, so about the same. Since 1980, for the 30 years post-1980, that has changed dramatically. So if you do the same analysis for the last 30 years, what you find is top quintile earners have increased by 55%, and bottom quintile earners have reduced their income by 4%. The top 1% of individuals in our economy control 25% of annual income. That's twice what it was 30 years ago. In the United States, the top 500 people in the United States control more wealth than the bottom 150 million people. So these are social consequences that are being created by the market economy and by the capitalist system that we live in. There's no self-correcting mechanism for these. They just, as years go by, they become more and more pronounced. And in the same way that the problems we had in finance, the lack of regulation, lack of governance, led eventually to significant financial consequences. So if we leave these social consequences to go unaltered over the next 5 or 10 or 15 to 20 years, we will see substantial social consequence. And that is, I think, what we've seen the beginnings of in some of in the Occupy movement and other protest movements that have sprung up around the world. So what's the solution? In our view, the solution is to rethink this very binary way we look at the world. So from a company perspective, we're used to talking about either for-profit companies or for charities. We need to start thinking about a middle way, social enterprises, co-ops, which we'll talk about later, in the UK, community interest companies, in the US B Corps. In the world of public spending, we need to get away from this issue of this choice between public spending and private spending and think about providing opportunities for social companies. There are 800,000 people employed by social enterprise in the UK today. They need a fairer shake in terms of winning public and government contracts. And finally, investment. And that's the thing that we're most involved in at Big Society Capital. We need to get away from the view that you can only invest either to maximize your risk-adjusted return or to make a philanthropic donation. And I think over the next, our hope is that over the next 5 or 10 years, as I say, we'll be able to present, through Big Society Capital and the intermediaries we support, significantly more opportunity for individuals and institutions and companies to make these investments that create, as I say, not just some financial return, but hopefully significant social impact as well. So thank you. I'll stop there.